Welcome to the DeFi Standard, and this is Mickey B. Fresh. And today I have Brad Kimes with me and Matthew Rosendin, the creator of the TRUSTLINE app and Probity Vault.
How you doing, Mickey?
I'm doing great, Brad. It's glad to be back, getting the band back together. It's been a while since we did a show together, and it's great to have this interview now with Matthew, who's creating this amazing application that I think a lot of the community is really excited about because it's built on the Flare network and also the XRP Ledger. And that's, just an amazing concept that it's able to use both of these networks together.
Absolutely. That is one heck of a 1-2 combination. Matthew Rosendin, how are you?
Hey guys, I'm doing great. It's great to be on here.
Thank you for being here. So, Matthew, for the people out here who haven't heard of TrustLine, just give them a quick overview of what TrustLine is, the credit network, and everything connected to that.
Sure. So basically, at a high level, what you have with your traditional credit card companies is you have banks that are involved, right? They issue your credit card. They fund the loans when you make purchases, you pay it back later. There's like card processors with the terminals when you swipe your card. So there's like these different components, and I thought, this could all be built on crypto rails. DeFi is all about taking out the middlemen. So, you have people being their own bank, you have lending protocols, you have all of the ingredients in order to build this on crypto rails. You don't need a bank. You don't need, card processors because, you just interact directly with the blockchain, and that's what processes payments. So that's kind of the direction that I'm going with TrustLine.
And inside of this model, you have the TrustLine credit side, Probity Vault, and then a stable coin. Talk a little bit about the different components that make this entire platform up, if you could.
Sure. So we have the mobile app. So this is basically, I compare it to like a Venmo or a Cash App. It's kind of like a peer-to-peer payments app. And so anyone with the app, basically you can transact with. And there's the credit component to that as well. So I'll get to that next. Basically with credit cards, you have, a bank who's providing some sort of a loan for consumer purchases. Well, in this case, we have Probity, which is, a decentralized app built on, the blockchain on the Flare network. It's created with smart contracts. It allows users to, pool assets together, and the smart contract system just makes the loans out to whoever needs to make a payment through the mobile app. So it's, instead of a card network and the bank making that loan when you're making a payment, it's basically all routed through the blockchain. Everything is crypto native.
It's really interesting. Mickey, did you want to grab something?
Yeah, so this seems like one of the first credit-based applications, basically combining the trust lines of the XRP Ledger and the smart contracts of the Flare network. So is this considered really one of the first of its kind, bringing this to the blockchain, Matt?
Yeah, Mickey, I think this is the first of its kind in a couple of different ways.
Okay.
We've got, the stable coin. Now that's been done before with MakerDAO's DAI stable coin. It's crypto collateralized, but the interesting part is that it can be basically trustlessly issued onto the XRP ledger. And that's done using basically this feature of the XRP ledger called issued currencies and trust lines. And so, yeah, that's going to be a first. And then, I think generally peer-to-peer payments with a kind of lending mechanism at point of sale is also a first.
Yeah, this seems like it's taking. So, just to give the viewers a understanding of what's going on here, users or owners of XRP are able to bring their XRP onto Flare, mint FXRP, and then put it up in collateral in the Probity Vault. And now the issuance of that RA stablecoin could be on the XRP Ledger, right, Matt?
Yeah, that's right. And that's one of the key reasons for that is because the XRP Ledger is built for payments. It's incredibly fast, incredibly efficient, and low cost.
Yeah, so it's harnessing the best of the Flare network and then the best of the XRP Ledger to create this system, which is absolutely, I think, amazing. And it also has, the Flare Time Series Oracle there, which is able to have the price feeds to manage that collateral in the Probity Vault too, right?
Yep. So with Probity Vaults, basically, it's like a two-sided sort of market. Well, it's a two-sided marketplace, right? You've got basically people who are supplying the assets, and they earn interest on basically that collateral that they provide to the system. Which on the other side, people are borrowing the stable coin that's created from those assets that are supplied. So those borrowers, they can, borrow directly from the Probity DApp on the web or through the mobile app when that's available.
Okay.
So real quick, if I could jump in here, Matthew, before we go any further. So XRP to the FXRP on the Flare networks, and then to the Probity Vault, and then issue an, is it Array? How do you say the stable coin?
Yep, it's Ore. So
Array.
yeah,
Right.
So, okay, so practical application, because I know you just walked through that, but I really want to make sure people understand what that process can do. Can one of you provide a real practical application of why someone would go through that process to do those things?
Well, I think the user who owns FXRP would want to earn interest on their FXRP. They would want to earn interest by using it as collateral. And
That's right.
now, Matt, if you want to explain the use for the RA that they lend out then to that user.
yep. So Mickey basically just covered the supply side.
Supply side. Okay.
On the demand side, so you have Ore, it's a stable coin. You can use this, for your regular sort of payments for anyone who would accept it. So I'll get into what makes Ore actually different from any other stable coin and why you might want to accept it. But also just real quick, because it is built on, as a DeFi protocol, it's like a open system and can be integrated with other DeFi projects. So that's also a demand factor. But more generally, where I think that this can gain wider adoption using crypto for payments is as a credit tool. So, as you know, there's this two-sided marketplace, and people can borrow Ore. So they do have to pay back, at whatever the prevailing interest rate is, but they can access it. So it's like a form of credit, and because it's a stable coin, they can use it for payments. And what this means for merchants is that they can accept basically like a credit, like how merchants accept credit cards, and they actually have to pay these fees from the network. So that can be a considerable fee, like 3% or more in a lot of cases. So this would allow them to, avoid these fees. And also, yeah, I would just like to see this being used in the real world. So actually executing more on like, Satoshi's vision of a peer-to-peer electronic digital cash system.
Well, I think that's a great point that you're pointing out, that this is merchant friendly to save on the current conventional transactions fees that they're currently getting hit with. Did I understand that correctly, Matthew?
Yeah,
That's big.
Yeah, I just want to ask one question in there. I think viewers would ask those borrowers who are borrowing RA, do they have to put up collateral to borrow it? How are they able to borrow the RA on credit? How does that process work there to use it?
Yeah, so that's right, Mickey. So the way that it's set up right now is that it works like a margin loan where the borrowers provide collateral, and then they're able to borrow this, stable coin or a. And the reason for that is basically in this, trustless kind of system. You don't want to lend out and then have someone run away with that. Maybe you don't know their identity, they won't pay it back, etc. Now, that being said, there is a potential for, future progress around more like actually using some form of identity, uh, using some new, advances in cryptography. Like I know there's a project who's using a ZK snarks, which is basically it allows you to, verify some sort of information without actually knowing what that information is. And that probably sounds very strange, but I know there's a project who's, has credit scores. They can verify credit scores of people in a decentralized anonymous fashion. And so that might be a path forward for like more sort of traditional credit without, margin lending.
I see. That's interesting. So just to narrow down one more component of that. So those who put up, say, FXRP as collateral to issue RA. Now, the borrowers are also putting up collateral then to borrow the RA?
Yeah, that's correct.
So there's going to be excess collateral here. So this is an interesting system where it kind of has more safety parameters, it seems to me, than like just the straight up MakerDAO, because now you're adding in the borrower who's putting in collateral and then the issuer who's putting up collateral too here. So how does that give unique, I would just think that gives some unique abilities to the whole system to operate, because it's operating in a safer manner because it has this excess collateral to it.
On the supply and demand side.
Yeah, on the supply and demand side.
Yeah. So I think it does add safety to the system. I also think there's a couple of ways I think where this can go. So, you're able to right now provide the collateral if you want to borrow it. It is different than MakerDAO in that, you're only providing a set amount of collateral, and then you're getting the DAI stable coin. And this, it's you have people who are actually earning interest from the creation of ORA. You've got people who are borrowing it, who are paying that interest instead of the DAI holder who is paying off that debt themselves. So I do think that it does, the way that it's set up, if there is like a Black Thursday event, it's probably less, prone to certain situations arising where, you have a bunch of liquidations happening. It's got this dynamic interest rate. So that will probably, fluctuate around if, there is a situation where there's a price crash. And I think that is a long way off from now, though. There's still other safety mechanisms that are going to be added in. which haven't really been discussed too much yet. But I would like to move the conversation a bit more to discuss some of those new safety features.
So Matthew, let me ask. It's really like a 2-for-1 question here. What is Trustline's target market for probity? Is it the retail investor? Is it institutional investor? Is it both? And what competitive advantage do you feel that you have with the Trustline app and all its components versus, let's say, another DeFi platform out here?
Yeah, so I think that the initial target market is pretty clear to me. You know, anyone who holds XRP or who's going to be holding Spark, this gives them an opportunity not to just earn interest, but also to take out a margin loan and use that as they see fit. So they get, you know, that additional utility that they didn't have before. But I think more broadly, like where I would like to see this go is not just, you know, XRP or Spark holders, but um, other cryptocurrency investors, and even people who are not in crypto today. I would ultimately like to see this um, possibly being used by them, and maybe the cryptos, you know, abstracted in the background or something. So yeah, hopefully that answers that first part of your question.
Mhm.
Um, so
Okay.
Yeah, and then the competitive edge, like where do you feel like, you really stand out comparatively to other DeFi platforms that are out here already?
right. So compared to centralized, you know, uh, functions, CFI or centralized finance, I mean, I think there's a pretty big and obvious benefit that, you know, the DeFi protocols are open. They can be integrated, built upon with other protocols. Now, with the centralized finance systems, those are all closed systems, right? You can't integrate. So that's a clear advantage. I think that like over time, actually, the more open systems that are interoperable will win in the long run. And yeah, so I think just given enough time, the advantages will be pretty clear because everything will be integrated together.
Also,
Yeah,
yes, I would like
well
to add
said.
to that, Brad. Also, Flare has all these F assets coming over there. So you
Hmm.
have all this value in FXRP, in FLTC coming over, FXLM coming over, F Doge, which is now the number 5 coin, eventually FBTC. Now, Matt, are these also going to be available, and Spark too, as collateral to be used in Probity Vault in
Thank
the
you for
future?
that. Thank you for that question. So I think the most important thing when assessing like what the underlying
Hmm.
collateral assets will be is what is their risk profile.
Hmm.
So I think that, yeah, there are a couple of different aspects to that. I think like, you know, XLM would be like a good candidate because you've definitely got something similar going on to XRP, which is
Hmm.
kind of that utility and
Hmm.
cross-border remittances and
Hmm.
actual utility propping up the price.
Hmm.
Now with Dogecoin, I love Dogecoin.
But
Yeah, I think that would be too much risk to introduce.
okay, yes, but something like, say, how about when Bitcoin comes over, or Litecoin, for example, they have a lot of value. Would those be options that could be supported in the Probity Vault, or is it
I,
strictly going to be more just like just a couple?
yeah, I mean, Bitcoin definitely makes sense.
Okay. And Spark, obviously. Now, I guess I got to ask the question here because I know a lot of the viewers on my channel are definitely going to ask this. When you put your FXRP in the Probity Vault, are you still going to be able to earn your daily Spark rewards out of the general rewards pool?
Yes, this is a question that a lot of people have been asking. and I'm looking into it. So this is, something that is probably possible.
Okay.
As you know, like everything in DeFi is, uh, smart contract
Mm-hmm.
systems. It's all open, and a lot of things are possible. I don't see why this would be any different.
Mm-hmm. Yeah, because I think that's a big, selling point to people because they're going to be able to bring their XRP over, and they know they're going to be able to earn Spark daily for just bringing it over as FXRP, and now they could put it in this vault. They could earn their Spark, and they could then, issue the Ore stablecoin, earn interest on that, and then also collect their Spark daily. And now could they put that Spark back into the Probity Vault to help buffer their collateral more, and then issue more Ore? So like that's where I was kind of seeing this could go. So it could help people manage their collateral ratio, and then they could just keep compounding it in a way. Is that something we could see in the future?
100%.
All right, that's
Very
really
nice.
good. And then even like to an extent, with managing collateral, I know people. They use it. By the way, the user interface is up. I want to let everyone know. The test net. I don't know if that's something you want to talk about right now. We could talk about that later.
Well, I think the test net,
Is waiting
we're
on
it's we're
Costin.
waiting on it. The Costin, it's being
Mm-hmm.
worked on, but I think I set up a new sort of API URL, and I upgraded the node to the latest version, got it running. Things are looking good. So I'm excited for when that's all back online.
Awesome, awesome.
Nice. So, Matthew, let me ask you a quick question here. So, I heard you talk earlier about like, like a Venmo, PayPal type experience. Does that mean like somebody of a real basic level of, experience with crypto and DeFi could work this application, or would it need to be like a higher level person? What's the user practicality you're going for here?
I love this question. So I think generally what we're going to see is it's a lot of the early adopters are going to be people who are in crypto, and people who, maybe like Gen Z, or people who are grow up with the internet and technology, and who actually see like Bitcoin as like something obvious, whereas they see the fiat world as, maybe a relic of the past. But my actual goal is to make the app usable, basically, like for, you know, um, anyone of any generation. I like to think of like, my grandparents being
Yeah.
able to use this app
Mm-hmm.
and make it that easy and seamless.
No, it's exciting, man. That's a great goal, I think. It's a
Now,
great goal.
so I guess the next thing I wanted to mention here, or to ask really, is that the TrustLine Credit Network also has a unique governance token that comes with it.
Hmm.
So it's my understanding that when you earn interest from lending out your RA, you could you you compound that interest per second, and you could either take that in RA or in TCN, which is the Trustline Credit Network token and is a governance token. But from my understanding and reading, it has a unique feature as it's also a stable coin, but it also could have a premium value on it. So how does that work, Matt?
Yeah. So right. So essentially, you have users who are borrowing, they have to pay back, and either they pay back with interest, or like, that gets paid back either way, because it
Mm-hmm.
is a margin loan. There's collateral
Mm-hmm.
securing it. If they run off, then it gets paid back either way. So like, you basically have a guarantee that whatever interest is accumulating in the system, it's going to be withdrawable by the basically the supplier, the lender. So uh, what that means is, there's actually basically like a internal ledger is a part of the system, and whatever interest is accumulating that you have, that's separate from whatever collateral that you've put into the system. But the TCN token, it's basically going to be like an ER or a FLR20 token contract. So it will be able to mint these tokens, and send them over to whoever's earned the interest. And then, if when somebody pays interest into the system, interest is paid off. Basically, how it works is like, TCN token is being burned. So basically, you have like a net equilibrium, like all of the interest in the system is being paid into the system, and it's withdrawable from whoever's earning it.
Okay.
And that's in the form of the TCN token. The TCN token would then be convertible one-to-one with a ORA. Technical details on that still have to be released. It's not in documentation currently, but
Gotcha.
yeah.
But it's also going to be the governance token for the network too, which will decide the parameters. So, I mean, there would be reason to hold the TCN token once you earn it.
Yes.
Right.
Absolutely.
Okay. Or you could have RA, which now can RA be used RA on the Flare network, like you said, in other DeFi protocols, just like how DAI is used in a bunch of DeFi protocols. RA is going to be able to be used in all different types of applications that are probably built on Flare. Now, it's also going to be able to be brought right over to the XRP Ledger. Will users will you be able to bring it over like as somebody who borrows RA? Do you borrow it on the XRP Ledger or do you borrow it on the Flare network?
Yeah, this is a pretty good question here. So, you as an individual user, as a borrower, you'll be able to borrow it, if you're on the Flare network, and then the ability to transfer that yourself to the XRP ledger is there as well.
Okay.
And
So you simplify that process that was in that preamble that Hugo wrote for Flare, where there was those 7 different steps. So that process has been streamlined so that we could do that within the probity.
So yes, well, it would be within the mobile app
The
mostly.
mobile app. Okay. The mobile app. Okay. So we'll be able to bring it over there and then trade it on the XRP Ledger DEX, right?
Yeah.
That's cool.
No one can stop you from doing that, but you know, uh, there's the Sum app, right? So I'm looking to have that integrated. I think they came out with a DEX integration,
Yes.
so it's really nice that they have these new features coming out, and that you could use those features that way. Not everything
Really?
has to be built into the TrustLine mobile app, just the core parts. It helps keep a bit more focus.
Really cool. Yeah. And now I know that Vite Win from XRP Labs is proposing the amendment with hooks. So that could add even additional features maybe in the future, for the XRP Ledger that could be used with TrustLine. So I could see how these applications are built, and over time they could just evolve and add new components to them as the different networks add new capabilities, like the XRP Ledger with hooks, which is kind of like light smart contracts that could add new functions, right, for say TrustLine in the future.
Yeah, it's being looked into, absolutely.
Exciting.
That is exciting, and not to sidestep everything and where we are, but I want to ask a very basic question, Matthew, because I know Mickey B and I know the answer, but people may not. But what made you choose the XRP Ledger and Flare networks to interoperate with? And I think we know what the answer is, but you have a history with the company, don't you?
Yeah, that's right. So I used to be a software engineer at Ripple Labs. I've always been a fan of the XRP Ledger. It's incredibly fast. It's built for payments. It's able to process a lot of transactions per second. So compared to Bitcoin and Ethereum, it's just way better for payments. Now, what was lacking on the XRP Ledger, which these new hooks kind of address a little bit, is smart contract functionality. But hooks are still sort of kind of like a light sort of smart contract,
Yes.
whereas the Flare networks, what that brings is, the full suite of smart contract capabilities for XRP. So I feel, what's needed for building Probity, that kind of component of the system that generates these loans is had to be built on Flare.
Mm-hmm.
Yeah, no, well said. I mean, we happen to be big fans of both. So,
Yes.
we
Yes, we do.
that was one of those loaded questions we knew the answer to, but I'm glad the audience got to hear you share your background there. I had a quick question as far as liquidation is concerned, and obviously with DeFi, this has been one of the nail biters for a lot of people, especially in a volatile market, Matthew. So, how much time do suppliers have to post additional collateral when liquidation is faced from an under collateralized position?
So the way that MakerDAO does it is when your position is under that liquidation ratio, you're basically prone to having your position being liquidated at any point. So um, in this system, it's a little bit similar. Now you want to be able to keep it sufficiently collateralized. And I would like to create a notification system for people that continuously monitors the health of positions. But yeah, I think this is just a aspect of kind of like what you see in margin, lending or trading and across the world, and it's always kind of a thing, but uh, it's I think becoming more and more accepted and understood, and as long as people are aware of the health of their vault, uh, and it's sufficiently collateralized, it should be okay for the most part. I think it'll be fine.
Absolutely. And I want to stress to people that are listening that, sufficiently is a relative term that everyone needs to understand what the market's doing, the way it's swinging. And Matthew, maybe even if I could suggest, even like somebody gets within 15% of their liquidation limit, maybe they receive an alert and they have a chance to fund, that account further to expand the collateralization. Is that something that's practical, you think?
It's definitely practical. It's something I'm thinking about. Now, the problem is that the blockchain itself doesn't have a way to monitor and create these alerts.
Ah.
So it would be more like some centralized server that's assessing the health of these vaults. And, that is kind of like a service. And but I think a lot of people would, want that sort of a service.
Yeah, or in your Venmo type user face, that stylings interface app, maybe it could be a choice that the user could set it for themselves as an alert inside of their application to give me a notice at 15%, 20%, or what have you. I think that
Mm-hmm.
could remedy a lot of issues about DeFi right there.
Yes,
Mm-hmm.
certainly.
So I just have two more last questions here. Um, One is going to be the difference between the mobile app of Trustline and then this, what I've seen on the test net so far, which is the web based. Now, is the web based one going to be where you basically, do the issuing for the probity? That's the web based, and Trustline is the mobile. Am I correct in that,
Yep,
Matt?
that's right. So
Okay.
the web-based is all on Flare. The
Oh,
mobile is going to be mostly XRP Ledger.
Okay, great. Okay, that's great explanation. All right, that clears that up. The last thing here, I just want everyone to realize is this is a major use case for XRP to be used as collateral. And I think that's really important because it locks up the supply and it's minting this RA stablecoin, which is basically, using XRP's value to then transact on the XRP ledger to pay for, real world stuff like Matthew was explaining. And that's really, it's going to be a complement to XRP. So I just want everyone to realize RA is not like a replacement for XRP. It's, a complement, and it uses XRP's value. So it gives us and the ability to basically use our XRP as collateral, lock it up, and then to lend out the stablecoin. I just wanted to reiterate that because I know some people will be like, oh, is this replacing, XRP and whatnot. So was there anything you wanted to add to that other use cases we could see from RA? Like, this is RA going to be something we're going to see out there on other exchanges? That's not really what you're going for, right?
Well, I think there's a big benefit to having RA being traded in secondary markets.
Okay.
I think what I would like to see happen is RA being traded on a decentralized exchange.
Okay.
And I know that's part of the Flare Finance ecosystem as well. So that might be one of the near future.
That's great to hear, because decentralized stablecoins are like the foundation of, we see how basically with MakerDAO and DAI, that's what kicked off the DeFi ecosystem for the most part on the Ethereum. But what TRUSTLINE and Probity here is, it's like a combination of MakerDAO, Compound, a little Aave with the XRP Ledger's uniqueness, and the Flare Ethereum smart contract. So it kind of is the best of all worlds, but a decentralized stablecoin would go perfect on the Flare Finance ecosystem. It's one component that is missing from that. So that's why I've been saying this is a complement to what Flare Finance is doing, and composability, I think, is what DeFi is all about. These are money Lego blocks meant to go together, and I think we're going to see that in the future. And I'm glad that you said that, because I was thinking about that too.
Yeah, and if I could just one more quick question too, Matthew, because we're talking about decentralized finance broadly. Do you see an SEC node or some kind of market regulator node being on your decentralized platform, or do you see your marketing approach as individuals just using and downloading the app and using this, or do you see a market approach to where you're an interface to an exchange like we've seen with other DeFi as well?
Yeah, when it comes to the topic of regulation, that's something that I've been thinking about a lot. It takes a lot of time and energy, but it's all for a good reason. They're trying to protect people, and I think I will probably be doing a lot of the compliance activities for the mobile app, because that is like a closed source application, whereas the Probity decentralized app, there's already been contributors from not affiliated with TRUSTLINE at all. So I think Probity will definitely be sufficiently decentralized where it kind of falls under the umbrella of like a safe harbor, kind of what you see with any other decentralized finance project, that the SEC is basically says, okay, this looks fine, there's not any central party involved. And because in the cases where there is like some centralized party who's creating the system, they will say, okay, well, they created this user interface, and there's some, like responsibility there behind that. So, I think it's definitely possible. And in fact, I think it's the direction that it's going in, is that the smart contract system, probity, that's all going to be sufficiently decentralized. And then the mobile app is kind of the trickier part, where, yes, there's going to be some rules that have to be followed, things probably related to just, regular money transmission laws. So that, I think, isn't too big of a hurdle, and ultimately will, help protect users.
Yeah,
Well
that was
said.
a good. So basically, we could see the mobile app is going to be more the regulated side, possibly that with identity or other types of things with PayString. Are you still planning to integrate with PayString? So I saw that on the original website. Like, is that part of the plan?
Yep, that's correct. So PayString is actually, fully up and going with the application. I know it's not uh, released yet, but that's in the app.
Oh, exciting, exciting. I like to hear that. And yes, so Brad, to your question, basically, as long as probity is, sufficiently decentralized, there's no reason for the SEC or anybody to really get involved with that. That just kind of runs on its own. But I like to hear what Matthew, what you said there, how the mobile app side that could potentially have, the connections to the real world, legacy finance will be more on the regulated, and I think people are willing to accept that. That DeFi is never going to be like completely outside the realm of all regulators. There's going to be some hybrid aspect of it, to bridge, the traditional world and CFI and legacy with DeFi. And I think users, especially in the XRP community, we accept that. And I think we're okay with that. And then, we get all the benefits of DeFi with the probity vault and all the yield and things like that. I guess the last thing that we just didn't touch on, and I know somebody's going to ask the question, can you just explain, Matthew, of how RA maintains its price peg to $1 in a, I guess, simple way?
Sure.
Thank you.
Yeah. So essentially, with a crypto backed stable coins, the goal is to have uh, backing for however many units of the stable coin that are in circulation. So with centralized stable coins like USDC, you have US dollars in a bank account that are backing whatever coins are in circulation. With a crypto stable coin, it's actually the same way, except for the fact that because crypto is volatile in relation to the US dollar, you need to ensure that there's more crypto collateral, more value than the actual amount of value of a stable coin in circulation. So what that means is you have to over collateralize the system, and in case there's price shocks, that price goes down, so that the system still maintains a sufficient level of collateralization, and that its reserves are still in good health and backing the coin. So essentially, that is what keeps the stable coin, you know, um, above, like, or at $1. If the stable coin does move above $1, and let me just touch back up on that point, right? So, like, if you want to, return a stable coin to the system, um, and say, like, say you have like a global net settlement like MakerDAO does, you would want to guarantee that you'd be able to exchange, the stable coin for $1, right? So now, because the stable coin, it can trade above the peg, right? Because there's more value backing it than, the value of the coins in circulation. Well, in that case, it's a little bit more interesting. There's different dynamics going on. There's, certainly cases like arbitrage opportunities, for example, that help, the coin go back to its baseline, and other factors, like what MakerDAO has, again, that global net settlement that also helps keep the price pressure closer to $1. And a similar aspect is going to be needed to be built for Ore. So this actually kind of ensures that ultimately, in the case of, realm of possibilities, that no matter what happens, you have that backing for the stablecoin.
Okay, so that's like what the reserves and the dynamic interest rate, basically, some aspects of that allow it to always manage it to be at $1 beyond just the collateral being there, right?
Yes, yes.
Okay, we could dive into that further. I know you're still working on some of these little details, so I just want to let everyone know that, there's certain things that, right, you're still nailing down certain details of the, I know, like the dynamic interest rate and the order book of the interest rate. I know in the early documentations you had, does that still apply, that original PDF that was released?
Yeah, I would say so.
Okay.
But the thing is, I've simplified it. So instead of creating like a order book, all of the loans that are created move the interest rate, but they move it along a predefined curve. Basically, what the order book does, it allows the interest rate to move more fluidly, based on supply and demand market mechanics. So, I think that's still, I compare it to like Uniswap. So like Uniswap also has this kind of pricing mechanic that's kind of predefined, and that's in version 2. But in version 3, they came out with this new sort of pricing rule or mechanic that is, much more efficient, and just expands the possibilities by like many, many times over.
Okay, excellent. So when it's not something to be concerned with the peg, then there's multiple safety features, and I know that TCN is also another backstop as a last resort too, right?
Yeah, that's right. Yeah.
So, yeah, wow, this is as complex as it sounds. It's kind of simple when you get down to the nitty gritty. So, just for all the viewers, I know it sounds like a lot, but there's going to be more information. Is there a white paper that will be released in the future?
Yeah, so there will probably be a white paper coming, like a early version, and then kind of like a more official white paper after the protocol has been deployed on the mainnet. And the documentation is going to kind of serve as a basis for that. And as I update the documentation with the more features of the protocol being developed, it'll closely resemble the white paper.
Okay, excellent. And everyone could go to trustline.co, and the documentation is on there, and that Matthew will continue to be updating. So that's great, and I really love what you're doing. Brad, was there any other questions you had left?
No, not at all. But Matthew, I have to echo the same sentiment. It is exciting to see what you guys are doing. And this is the first time I've really had the opportunity to really dig down on what's going on inside of Trustline, and very excited for you and everything you guys are doing.
Thank you, Brad. Much appreciated.
Thank you,
Yes,
Matthew.
and I think this is something that even like in the future, I could see corporates and with this appeal to like even like hedge funds and corporates and other types of institutional investors, or can you see it progressing in that way too, them being at least stakeholders in it? Because it has so many aspects of like being the banking system with the vault, the treasury, and the teller. Like, is there room for those type of stakeholders to be in this ecosystem?
Uh, yeah, I would say that there is. I would actually hope so. I had this kind of idea that maybe banks would one day also be providing liquidity into the system, through probity or something, because it's still a system where anyone could plug into it. It could be a bank, uh, or whatnot. So, like, for example, these institutions, they do kind of have these licenses that are, I think, important in the real world in order to accomplish some of the things that I want to see done. And that also kind of coincides a little bit with, um, moving away from this margin lending aspect, which I think will always be there, but having more of institutions that are really good at assessing risk and whatnot. Now, like, I think that it's going to be a hybrid, as we've been talking about, where people are able to engage with the system, also with these institutions. And I think it will ultimately create a more level playing field.
Excellent. Yeah, I could see that. Like, even like the XRP Ledger, like gateway concept, where banks or institutions can be like the aspect there. Like, are those the type of roles we could see playing?
Well, uh, it certainly could be. I don't have exact answers for you today, but I'd like to see where this all continues to go and see how it develops.
Okay, gotcha. Yeah, this is exciting. I think the community should be really excited about this, because now we get to be liquidity providers for the ecosystem with our XRP. It gives us another use case for XRP and for us to earn. So I think this is our way to participate in the Flare network and on the XRP Ledger. So more opportunity for us as users of the Flare network and of the XRP Ledger, and owners of XRP and Spark too. And I've been leaving Spark out, but Spark was another asset you could use in the collateral too, right?
That's right.
All right. I think on that note, we're going to wrap it up, unless you had any other questions, Brad or Matt.
No, I'm good, but thank you, Matthew. This has been enlightening, no doubt about it, and all the best to you and the team. I can't wait to see what everything looks like when it comes out.
Thank you so much, Matt.
Much appreciated, you guys. Thank you so much.
Hey, take care.
All right. Thank you. I'm Mickey B. Fresh, and I'm out.